Now, the South African Reserve Bank's Monetary Policy Committee will be announcing its decision on whether to make any changes to lending rates. Now, the central bank lowered its repo rate to a 5-decade low in 2020 at 3.5%. The Monetary Policy Committee has cut the interest rate by 3 percentage points since the beginning of 2020. 275 basis points of that easing was in response to the impact of COVID-19 and in support of the economic downturn which resulted from the pandemic-induced lockdown. So there's lots of speculation, lots of analysts trying to predict what is going to actually be happening today. I know that one survey of 20 economists, 11 of them said that we should see an increase at around a small percentage, but we will see an increase, and others saying it will remain unchanged. So let's get a little bit more now, and we're joined by Advocate Levan Gopal. He's an economist and director at Merchant Africa, and we'll get his expectations ahead of this afternoon's MPC decision. Levan, always a pleasure speaking to you. Welcome.
Good morning. Good morning to all of your viewers. Leanne, of course, this is a very sensitive topic. Interest rates, something that affect all of us in the pockets and at the bank. The interest rate decision will certainly have an impact on what your home repayments are, your motor vehicle finance repayments, and of course credit card. In general, the price of money is likely to change if interest rates change later on today. As you've indicated, a poll of economists indicating that there is a likelihood of a slight increase in interest. Bear in mind we're experiencing interest rates at the lowest level in more than 40 years. And of course, these have been challenging times amidst COVID and some of the other drama that we've observed locally. But the decision to change interest rates is quite often a function of where inflation is sitting. And interest rates are used as a tool to try and cool or manage inflation.
So
the movement in the petrol price, effectively the changes that we've seen in the oil price are probably the most guiding force in terms of inflation, and that generally sits in a band of between 3 and 6%.
Yeah. So, is that what are we looking at? I mean, are we looking at some predicting 25 basis points would possibly be? I mean, the Reserve Bank has been warning us, saying that we do not need to start seeing an uptick in interest rates. But is that kind of a prediction that you're happy to sort of put your money on? 25 basis points?
So the sort of movements that you're likely to see at this low level of interest, bear in mind the repo rate is sitting at 3.5%. A change of 0.25% or 25 basis points is going to be something like a relative change of 7% increase in interest. And it's likely that if they do move up, it will be iterations of 25 basis points or 0.25%. And as I've mentioned, the only reason they're going to do that is to try and keep inflation between that 3 and 6% level.
Yeah. So when we look at, the fact of where we are as South Africa, I mean, you've got petrol prices that are sitting at, basic record highs. And I mean, it should be the way things are looking, the weakness in the currency, the price of Brent crude at the moment. I mean, we'll probably see petrol breaching 20 Rand a litre come next month, which is very, very heavy. Electricity prices, food prices, everything has gone higher. We know this, except for salaries haven't gone higher at all. People, in fact, are unemployed at this point. Can the average South African afford this right now?
Unfortunately, we can't. And the reality is, and I've heard this argument over the years, it often comes as interest rate increases during a period where we are hurt the most in the pocket. So, of course, it's a question of now high unemployment rate and the official rate well over 32%. But also, as you indicated, that petrol price hurting transport of goods and, of course, affecting the price of everything that we purchase. So an increase in interest rates would be highly punitive. The reason that interest rates are used as a tool, as I mentioned, is because of the inflation rate. But many would argue on a practical level that those are forces well beyond the South African finance and Reserve Bank forces. Bear in mind, one of those key drivers in inflation, and you've alluded to it, being the petrol price, and that is spikes in the oil price effectively that have made that petrol price so strong. So when we cool inflation using interest rates, we're trying to control a force sometimes beyond us.
Yeah. I mean, if we look around the world, there seems to be that steady increase that's happening in interest rates. And, the prediction is that perhaps we should start seeing ourselves moving in the same direction as opposed to suddenly playing catch up in one go and perhaps making a much bigger increase than it should be. But perhaps you can give us more of an understanding of what it's looking like globally, what other sort of interest rates around the world are looking like. And should we be doing that and keeping up with the world, or rather worrying about the economic state that we're in right now by ourselves?
So in terms of global interest rates, we have seen a trend to move higher. Bear in mind, interest rates all over the world also sitting at those lowest levels that we've seen in decades. And in the U.S. in particular, the feeling is that we're going to be seeing an interest rate increase in dollar terms from the U.S. We've noticed from some of the emerging markets the opposite. Turkey, for example, cutting interest rates aggressively, and their Turkish lira going into something of a free fall. Bear in mind this discussion around South African interest rates will have a very strong bearing on movement of the currency, but at the same time, it is in fact the rand movements that guide interest rates effectively. You'll understand that a very, very weak rand means that we will effectively be paying a lot more for petrol. A weak rand-dollar exchange rate means that in terms of the oil price in dollars, starts to look very, very high, and that's why we see petrol prices going up. So there is a fine balance that the finance ministry, in conjunction with the Reserve Bank, will have to trade in terms of making important decisions. The decision today by the Reserve Bank is likely to be a very difficult one, and some of the best minds in the business are undecided about whether interest rates will increase today.
Yeah. I want to talk again about inflation. You mentioned it right up front, but perhaps we can dwell on it a little bit more, because we saw Stats SA releasing those inflation figures where we saw inflation jump from 3.2% in March to 4.4% in April. And we can see, what the driving factors are. It's rising transport, the food prices, all of these kind of things. And this is the highest since before lockdown, when it was around about 4.6% in February last year. I'm trying to get an understanding of, this and the effect that this, of course, is going to have on the Reserve Bank's decision with regard to interest rates, and how you're feeling about inflation right now.
So for a very long time, many analysts have come out with statements that it's almost mechanical, that higher inflation rates will be the reason that the Reserve Bank will step in to make interest rate changes. During these unusual times, during these COVID times, and particularly in light of the looting we've seen in the country, classic economics hasn't really been applied on a global scale. The events that we've observed and the movements that we've seen by a number of central banks, or the decisions made by finance ministries globally, have not necessarily kept in step with classic economics, and that's because we're in austere times. The inflation rate in general should be one of those key factors that will decide interest rates. We're not at the alarming point yet, and it is possible that you could see further increases in interest rates because we've seen this rapid spike in the petrol price domestically. But at this stage, the interest rate sitting at the 4% level seems to be well in check of that 3 to 6% range. And you may even see something of a cooling in terms of inflation, at least going forward in two periods, if that petrol price has topped off. With the oil price starting to cool, it's likely that you could see a petrol price change in our favor, a dip in petrol in the next 30 days or so.
Wow. Advocate, I'm holding everything, because I don't think we can afford that over 20 rand a mark. It's just crazy. I mean, I did see this morning we're below that 80 mark, but the currency's still not looking too good. But however, when we talk about the currency, there are concerns about rising international commodity prices as business resumes in some countries. But if we look at our currency, which is at its strongest against the US dollar since before COVID-19, can this perhaps alleviate the impact of imported inflation?
So the South African rand reflects probably some of the battered times that we've observed during COVID. And with our currency currently sitting at a lowish rate, just hovering around the 1540 level, it takes some of the impact of weaker emerging markets. Many people have witnessed that when emerging markets like Turkey in particular go through trouble, the rand becomes something of a punching bag. And we take the strain because of those markets. But one of the very big drivers behind the weakness in the rand has also been a strong dollar. We've seen a strong dollar in the last few trading sessions because of the interest rate changes that are contemplated at the level of the Federal Reserve. And you're also seeing that in commodity prices as the gold price starts to weaken, and again, a reaction to that stronger dollar. It is likely that you may see dollar strength dominate, at least for the next week or two, while people digest the US dollar interest rate perspective. But the rand weakness certainly going to be a factor for that interest rate decision in South Africa today. And rand weakness is also going to be a very big factor in terms of inflation. I think it all really comes down to where that petrol price will be. And so important points like the rand-dollar exchange rate and, of course, the oil price are going to be at the top of our agenda.
All right. Just finally, as we wrap this, the low interest rate environment that we've been in, how has it helped buffer the situation for South Africa during COVID? I mean, even before COVID, we were already going into recession. The economy wasn't looking very good at all. Then, of course, the whole issue of COVID hit. Then, of course, we saw what happened in July, the unrest, and that denting the economy dramatically, as well as our global image as well. I mean, interest rate environment during all of that, did that assist?
Before COVID, South Africa was knocked down to junk status. We noticed that the rating agencies had given us such a bad report that it wasn't considered as a favorable investment destination. And of course, amidst all of those problems, we entered COVID. So it kind of masked the true disaster that we would have experienced. I think cuts in interest rates could have shouldered some of the burden, but you also noticed a fair amount of accommodation coming through from national government. The fact that they have added to our financial support by letting banks put the pause button on some of the demands for home loan repayments or other finance repayments has been a fair amount of accommodation. It's an unusual type of monetary policy. And, of course, it's a function of these austere times. So it was accommodation in that sense, as well as the fact that we saw interest rates at that low. And I think quite a bit has been done to try and help us shoulder the burden of COVID. However, these interest rates would have been an opportunity for many to purchase homes, to take advantage of low credit for business and other financial activity. And we haven't really seen the economy use this in a way to flex its muscle.
Yeah, all right. Advocate, we've got to leave that there. Levan Gopal, thanks so much for talking to us. Economist and Director of Merchant Africa, sharing his expectations ahead of this afternoon's Monetary Policy Committee decision on interest rates. Usually late this afternoon, after 3, we should be hearing what it will be. All right, just gone 7 o'clock. Let's get into the top story.